Hey, what's going on, everybody? Christopher Franks, TexasWest Capital, Tillman Holloway, statistician, and Andrew Parrish talking about how you can get a good look at a butcher. So, hey, extra points, guys, if you understand what Mr. Parrish wrote there underneath. Hey, and if you actually got Tillman's.
Did you see that thing I sent to you on Instagram yesterday?
No.
Well, you got to look at it because it's freaking hilarious. It is.
What is it?
Uniquely hilarious. You did see it, but you didn't look at it. You just looked at your messages, but you didn't look at it. And it's Tommy Boy. It's them giving a pitch to Shark Tank, and it is hilarious. It's AI.
I saw you sent me something, but I was in a crowd. I couldn't watch it. Yeah, I'll watch
it. You were kind of not really sure you should be opening it around the crowd, huh?
No, I just think it's rude when people play loud stuff in coffee shops where everybody has to listen to your social media. You know, unless I got earbuds in, I'm not that guy. I'm very conscientious of the people around me, Chris.
I'll talking about coffee shops, overpriced coffee. You sound like everybody I went to law school with, man. I ain't never seen so many people walk around with Starbucks cups.
Well,
do you know when I never drank coffee until I owned a construction company, and I'm telling you what, they're like bakers. They get up early in the morning, and coffee is a much needed vice in that industry. So,
well, the best part of that video is the crux, the real meat of the video is he's like, you can get a good look at a butcher. No, wait, if it's your butcher, I don't know. Wait, if your it's that perfect.
He's the best. I wish he was still around.
He was great. He really was. So anyway, guys, I was gone last week. Obviously, was out. Wasn't feeling well at all. Really knocked me on my rear end. But I'm here this week. I heard you had a very successful Spaces. Had like 11 or 12 people show up.
Physical or was it emotional? What was going on there with you?
Emotional damage. Okay, no, it was I'm not even really sure what it was. I was talking to Tillman earlier. I was like, yeah, I don't normally go to the doctor. I just kind of deal with it. Mm-hmm. So it took a couple of days to get out, and by Friday I was some semblance of who I used to be.
So you said you usually don't go to the doctor, you just deal with it. I don't know what that means. Did you go to the doctor?
That means I'm so tough that this bug was real bad, so you should cut me some slack.
This means I'm just not a fan of doctors. Here's the thing. If you go into the hospital, if you go into the doctors, guys, here's the problem. You go in, they're bound to find something else, right? And as long as you don't go in, they can't tell you there's something else. And so ignorance is bliss, right?
Do you know those guys that are driving down the highway and their like cars are falling apart and they're leaking oil? That's the same mentality that you just uttered.
I ain't leaking nothing.
Everything needs maintenance, buddy. And I can assure you, just from the outside appearance, I can tell you need a little maintenance. In fact, I'm booking you a trip to the med spa to get you fully recovered from your
med spa.
You'll find out.
I'm right there with you, Chris. I know a guy, my buddy Bob Sacamano. He went in for a procedure. And my name is Bob. He came
Andrew is on a roll early today, guys. We're not even 4 minutes in.
He's already quoting movies I've never seen or can't recall, but it's still
Kramer, funny. Bob Sacamano.
Kramer.
Also, Kramer, the last time he was at the hospital, he saw a pig man. He saw
the pig man. I like that episode. That's a good one.
Yeah, see? So it's just better not to go. I'm just saying. Yeah. Anyway, so I came back today. Bitcoin drops a little bit. Everybody's freaking out. I mean, grand scheme of things, I've talked a lot on the way here about, if it goes through a certain level, then maybe we can look at some low being in. But until then, here's the lower targets, right? So one of my big targets I've talked about, we're just about there right now, is this idea. And Matt Hogan, I think it's how you pronounce his name, right? Hogan, over there, Bitwise, talking about this idea that crypto winter has been in since January of last year. Basically, this sideways, right?
Wait, there's a comment that says, remember, the only thing you can control is ignoring your health.
See, this is what happens when we let Bernardo around. He likes to eat mayo with his fries.
That is the quote of the day. I will repost that on my
Don't
Twitter
encourage
account
him.
later.
Don't encourage him. But
Okay.
anyway, so Matt was saying, hey, listen, guys, we're likely at a bottom. We're going to go up. And so that kind of aligns with what I was looking at. This idea that we have been sideways. It's been a readjustment, not a bear market per se, what we're used to. And so things get interesting because I've talked to a lot of people, go figure, and they're, for the most part, looking for 30,000, looking for, I got people still looking for 10,000, guys.
Hey, more power to them. Keep looking. Put those put those limit orders in down there and see if they ever trigger. It's hilarious. But at the same time, I can't fault them. You got to pick. People love extremes. The way I look at where we are right now, 75,000 is where we broke out.
Mm-hmm.
Literally in November of 2024. Yep. This is the point, and we built tons of energy right here because everybody knew as soon as we broke 75, 100 was inevitable. That was the sentiment. And so, retesting 75 and even violating it and maybe going to 67, 65, that is the telltale signs of like macro structure setting up for a major move. So, and maybe we violate 75, maybe we go to 55. I still wouldn't, that still would be a liquidity sweep to me. Like that would still count as that. And so we've got so much room, and I just don't see it happening is the point. And I do see like 75,000 was a major monumental move. In fact, we've only been here twice. We were here when we broke out November 2024. We were here when we retested April 2025. Then we broke up to 126. There's nothing that says we can't come back and retest again before we go to 250. You see what I'm saying? Like this 75 has to become the absolute floor foundational, structural pivot point. And 100's not.
Yeah.
So what is it? Well, 75 was the big structural breakout in 2024. That's the way I look at it. So, I mean, to say we're in a doom and gloom, I do think we're in a rounding bottom, and I do think we have had the 4-year cycles dead. But to think that we're in a bear market right now is insane to me. This is just a reconsolidation on an upward, bull market. Because let's not forget what Bitcoin did not last year, but the year before that,
Yeah. And then, I mean, again, the points you're making there, exactly the things, we've been talking about is this idea that, okay, so we come down here. But for me personally, what I'm looking for is that more significant push down and immediate move back up. I would not be surprised to see something like, like a $10,000 round trip,
a wick candle.
Yeah, something coming down there. The yearly S1 pivot sits there around 66,000. The monthly pivot is right there around 70,000. So, that gives us the area we're looking at right now. We're sweeping that previous low. Around that 74,000 kind of area that you were talking about. So, I mean, we're set up and everything's pretty much overbought. The weekly is sitting just above overbought at the moment. So, I mean, I think the odds that we, at worst, get a bounce from here, 66, somewhere around there, up into the yearly pivot at 96,000, I think that's probably the, one of the worst case scenarios here. And if we're breaking out through that, I think we head up. And so I bring that up because if anybody's been watching social media, of course, Bitcoin is like the whipping child of everybody, right? Epstein controlled, the Bitcoin developers back then. And Saylor, everybody's crapping on Saylor, right?
Jim Cramer has basically been mocking Bitcoin for about a week. Half of his posts are, Bitcoin's at this new level, and that's got to be the level you got to defend it at. Saylor, you got to get in here. Literally trolling, tongue-in-cheek sarcasm, haha, Bitcoin's a joke. And, at some point, it makes fools of us all. And so Jim will have his moment. He'll have his moment where, it's like that. It's like that little meme, do something, and there's different versions of that meme with the stick and do something. Sometimes it goes lower. Oh, not that. But then there's also a meme where it says do something, and then a green candle shoots through the stick figure's face, and there's blood coming out the top, right? So
but what also doesn't make sense about all of the naysayers at that level is they all went to school for finance. They all went to school for, economics, something math related. And if you understand free market dynamics, supply demand dynamics, if you understand, decentralization and the concentration risk associated with centralization, all these things are taught to you in school. And then if you take 5 seconds to speak to the right person about Bitcoin, you will see all those attributes in Bitcoin that you love and that you acclaim to uphold as the truest form of free markets. So like, how can you say, the fair and equitable distribution is a bad thing in your stance against Bitcoin, but at the same time acclaim that's why the central bank has sovereignty from nations? You know what I mean? Like it's you're literally arguing with yourself. And the only thing, it would be like me knowing somebody and being like, I hate that guy, he sucks. And him being a family man and being faithful and true and righteous and all the things that I attribute to and all the things that I aspire to, he is, and I hate him for it. It just doesn't make sense unless you're delusional or uninformed is the way that I look at it.
But most human beings are that way though, right? They're very adamant one way and then they talk out of the other side of their mouth, right? I mean, as human beings, people tend to, there's no like in their head, they keep those things separate. There's no like they don't think about it together, right? And you kind of, and it's like you said, you get there and you're like, well, you said this, but now you're saying this, and both with as much conviction. It's just human beings, and I think, I don't know, I think with AI, there's less and less thinking now, and so that's becoming more and more. But we do have an interesting question here. John is asking, do you feel the ick factor associated with Bitcoin may be enough to ruin it? And he felt the need to put on 4 or 5 question marks there. So he wanted some emphasis, whatever.
Well, first of all, I need to understand the question. The ick factor meaning just all the stuff that's going on with the Epstein files and all that.
I think that's probably what he means, yeah.
Here's the truth. You want me to go to the closest strip club that you have near to your house and you'll see the ick factor of cash. There's ick factor in money. Money has an ick factor attached to it. So it doesn't surprise me if criminals have used Bitcoin. But I will tell you, even that is a misnomer as it pertains to like, which one's better for a criminal to use, cash or crypto? Oh, cash. Cash isn't etched in stone on this thing called a public blockchain as a literal ledger of all the transactions that you've done legally or illegally. You see what I'm saying? So like if you're a criminal and you choose to use a public ledger to denote all of your illegal activities, you're handing the prosecutors literally the case and book. You know what I mean? So like cash, there is it's eyewitness testimony with cash. This is an evolution. This is better than cash. So the ick factor with cash is 1,000,000 times more. Go to any drug cartel, any prostitution ring, and anything that's going on illegal. Cash is king, I promise you. They'd rather take cash than they would Bitcoin any day of the week.
Yeah, I agree. Again, I think it's been one of the biggest things as well. When we talk about the people who are against Bitcoin, right? Always this, it's used for illicit purposes, and criminals use it and whatever. But when you look at the dollar, I don't believe there's anything out there that's used more for illicit purposes, right? And so, again, it's just I think it's just one of those narratives that people find easy to kind of hook onto. It sounds like it makes sense at first. But if you really kind of sit there and think it through, I think you kind of sit there and go, okay, well, sure, even with Bitcoin, yeah, okay, there's illicit stuff, and then there's ick factor, but there's a lot more ick factor with the dollars, right? Epstein had a lot more in dollar bills, I believe, than he had in Bitcoin, right? And so,
yeah, there's an ick factor with with people is the problem. It's the same argument, really, quite frankly, with guns, right? It's like, are guns innately evil? No, they're a tool. They literally have been used as such since the dawn of time for hunting purposes, for example. But can they be used for evil? Absolutely.
yeah,
But so can a knife, so can a fork, so can a car, so can an airplane. If your intent is to do evil, then the object by which you use to denote that evil is meaningless. It's still evil. It's evil any way you cut it. You know what I mean?
yeah,
So
yeah,
Bitcoin is not innately evil, no different than money is not innately evil. But evil people have money. Therefore, they use that money to do evil things. And people have done that with Bitcoin. They've done it with Ethereum. One of the most concerning things, honestly, you talk about ick factor. North Korea, they hacked and stole how much? 1.7 billion of Ethereum
yeah.
last year, and they got away with it. So you
Yeah.
talk about like some ick factor. It's everywhere and anywhere, and it just it's really has the only true indicator as to why is the people. We have a lot of evil people in the world.
Yeah. Follow-up question there says, any truth behind popular rumors about backdoors to the ledger by 3-letter agencies? And I'm going to say no, because guys, listen, it's open source. Okay. I mean, anybody can look up that code.
There is SHA-256. If it breaks, everything breaks.
Yeah.
You'd be a fool. You'd be stepping over, dollars to get nickels going after Bitcoin if SHA-256 breaks. If SHA-256 breaks, you can find out any national security secret. You can have access to every nuclear code. You can have access to every nuclear facility. You can hack every bank in the world. You can hack every stock market. You can hack anything, because that's the highest level of encryption that humans have invented to date. Now, quantum may change that, but Bitcoin right now is quantum resistant. Why? Well, because 95% of it's already been mined. There's nothing left. It's like, going to a coal mine and 95% of the coal's gone. We don't even need the chain anymore to have Bitcoin. We could be moving Bitcoin on a more efficient chain that's not proof of work, and it's still Bitcoin. And that ledger and those UTXOs can be tracked in perpetuity regardless of which chain they operate on. So SHA-256 is nowhere close to being hacked. But you also have, just from a technical nerd perspective, I'll get in, you guys are going to hate me for this, but you wouldn't just have to crack SHA-256 to break Bitcoin with any material effect. Here's why. Because every chain that goes on is a chain of transactions that are getting approved by all of the nodes in the network. So you have a 10-minute window in any given block or chain that's being added, link that's being added to crack it. So let's say you did crack SHA-256 and you started brute force attacking that 10-minute window, so that you were proposing to all the nodes a fraudulent transactional ledger that you push through, like, send all this money to me. Like, that's what you would be publishing. And because you would have cracked the code, you'd be able to essentially propagate that in the community. If that took place, they would just, the code, that blockchain would be invalid. You'd take the last valid blockchain, you'd move it to Bitcoin 2.0, and you'd be right where you left off. Now, if someone wanted to crack this chain, they would only be able to affect the transactions in this chain. The previous link in Bitcoin's chain, it's already done. It's already taken place. So you would not only have to crack SHA-256, but you'd have to have more energy computational power than is currently in the entire Bitcoin network not just for the current block that's being worked on, but you'd have to have exponentially to go back in time. So if you wanted to change the 5th block back, you'd have to have 5 times the computational power that exists on the blockchain today. Well, that amount of power doesn't exist in the universe. So, good luck. The point is no, it's not vulnerable at all. That's just a false narrative based upon people who have never mined before. They don't understand the technology.
Well, but there's a lot of misunderstanding in Bitcoin, because it is technical, and again, going back to human beings and their tendency to drift toward things that sound like it makes sense initially. We can talk with Andrew here about that same thing happens with Sailor, right? And strategy. Everybody's still talking about his average buy-in, and oh, he's so close to being ruined because it's dipping below that, but they're not paying attention.
My favorite meme has become this still picture of Roger from Mad Men drinking a drink, and underneath it says "Who cares?" Right? Because in the Mad Men show, it's a famous moment where I think Don asks him what do women think, and he's like, "Who cares?" he takes a drink, and so much of this is. Here's the reason why I think about who cares, right? Because 96% of all the capital that has gone into the Bitcoin ETFs is still there. Only 4% has been moved out those ETFs. So there's your floor. There's the reason why we're not down 75 to 80% right now in Bitcoin. It's that wall that exists, that floor that exists right there. The people that are selling, frankly, are people that have been in Bitcoin for 10 to 12 years. They bought at 300, 800, $5, $1,500. It went up to 100,000, and they want to get out. There's a big whale, Galaxy Digital, or the big story yesterday that sold $9 billion worth of Bitcoin. There was a narrative about, well, why did he sell? Who cares why he sold? It's his choice. His
$9
money.
billion.
Well, I can shed some light on why he sold, because no different than why I sold some silver when it crested. When you start doing risk analysis, right? When you have a price that's gone from wherever that person bought those billions of dollars of Bitcoin to where it is now, you have an exponential curve, right? And anytime you're on an exponential curve, one of the most difficult decisions you have is like, when do I get off? But the downturn to exponential curves is really nasty. And so when you have all of your wealth, concentration risk in one position, and you're on an exponential curve, there's a way where you can de-risk your entire position, but still have your cake and eat it too. Because if you sell, life-changing amount of wealth at the, even if you don't make the very tippy top, but you're at 100,000, 90,000, it's all immaterial. You're not measuring it against the price of Bitcoin. You're measuring it against the 200 million bucks you can take off the table. What does $200 million buy you, or $1 billion, or $6 billion? All those things. And so it's de-risking the trade. One of the things I was talking to somebody, and he's a big silver bug, and he was like, it's going to 250, it's going to blah, blah, blah. And I said, yeah, it very well may. But you have an 80% risk. When it was sitting at 117, you have an 80% chance of it halving, and you have a 20% chance of it doubling. Are those good? Is that the same odds when you got in and silver was $27 an ounce? Are those the same odds of failure? Is that the same risk reward ratio that you started on? No, it's not. So readjust your allocation accordingly. You know what I mean? That's the principle. Is like when risk reward ratios change, your allocation should change with it. Period. The end. That's like that rule 101 as far as I'm concerned. But
yeah, and it's especially relevant when you're talking about $9 billion.
Yeah, exactly. Think about that. I mean, if he waits and it goes down to 35,000, he's lost $4.5 billion. That's a lot of world-changing leverage. You know what I mean?
Fibo wanted to tap in here. Thoughts on Japan still being a nothing burger? Yeah, the S&P is about 1.5% from its all-time high. Wake me up when it's down 20%. That's my thoughts on Japan being a nothing burger. An actual correction is a 20% downdraft. We're nowhere near that. I mean, we're nowhere even close to any of that. So there are my thoughts.
Just like that.
Well, my thoughts. Yeah, I have no idea is the truthful answer. You know, I would be a reactionary trader to that event taking place because I don't stay up on it enough to really have any intelligent comments.
Yeah, I think when I look at it there, I think, you know, yeah, I mean, it's something that you watch, but I don't think it's anything. I don't think it's, there's a lot of people online who are trying to say that it's going to be like this super crash and everything. And I don't believe that at all. I think it's something that if it continues to materialize, it'll do it over time. You know, we're talking about years and years, nothing like this year or next year, or even in 5 years. I don't think that isn't the way that, you know, the BOJ happens to work. They'll go in there and tweak with stuff and mess with stuff and work with bonds and try and do what they can do. So, you know, again, I think, yeah,
there's my point. So why do we even talk about it? I mean,
I think it's something myself that it'll take time to go through. Slow burn, Fibo says. So yeah. But you know, for anybody that's reading that and thinking, oh my God, I got to be concerned about tomorrow. There's a certain 70,000 subscriber newsletter out there that's been talking about this yen carry trade blow up and how it's going to screw up everything for 2 years now.
Here's my whole point is there's $7 trillion of capital sitting in money market accounts, and there's only more money that's going to be printed over the next 2.5 years, 5 years, 10 years. And so that money has to find a home. And the more money that gets pinned up, sitting there doing nothing, being idle, the faster the rush is into these, you know, these kind of crazes and these asset classes. And I just don't see a world whereby which any crash that could cause would be long lasting is, I guess, the point. You know, the money's got to be placed. And we're seeing, you know, kind of everybody FOMOing into these markets that are going parabolic because they want it to be placed. They're looking for a home. The capital wants a home. And so I just look at, you know, we bombed Iran and the market didn't even, it was like a speed bump and we cruised over it at 75 miles an hour. I think the yen carry trade is less than that in the macro catalyst basket, you know what I mean? And so I don't, it's very low on the priority list as it pertains to what I think could happen in the next 2 years to screw the whole system up. That's, you know, it could be that, but there's things that in my mind are even more probable and more dangerous. And
there have been thousands upon thousands upon thousands of hours of podcasts in the financial universe for the past 7 years spent on what is the next catalyst to make us go down a meaningful amount. None of them have come true. Literally none of them. We have gone nothing.
You don't remember Y2K, dude? Y2K.
He said 7 years. He said 7 years.
Y2K, all those computers shut down and the whole world ended.
So
I still have food storage from Y2K. My dad handed down as a part of my inheritance.
Not at all surprised. But it is it's why I gravitate to folks like you know, Josh Brown and Michael Batnick. They continue to beat the drum of you can talk about these things, you can give some lip service, but the last thing you want to do is either stop investing or go short or radically change your portfolio because you think some big thing is going to happen that's going to draw down asset prices 20 to 40%. It just hasn't happened. The way that the market works.
Even if it did, it's not going to be a 9-year recovery. It'll be 4 days later. It's up 18%. It'll be a V-shaped recovery like all the other ones this year. Look at the last 2 years. They all look like this. I mean, it's
well, the the great financial crisis, the larger outcome associated with 08, 09, and a bit into 10, is that the structures of the markets were so shifted and changed that people don't realize it. That the idea of systemic risk was, for all intents and purposes, borderline outlawed. For a meaningful period of time, it was outlawed. So you now have banks across the globe that are so overcapitalized that the idea that we could find ourselves in that moment again doesn't exist. So some sort of hyper negative outcome would have to come from just absolute left field that I don't even think we could find our way to it right now.
But even let's just say that happens, it's still, I mean, maybe it is, maybe it's not. Fib can probably educate me on this, but like, is that as big of a deal as the COMEX failing? Because like every indication is that, we're on the precipice of that happening. And, the silver market is actually, expanding exponentially. And I still don't think that's going to be the end all catalyst. I don't think that market's going to get to a place where it causes a systemic failure across, every other market. But it probably has the highest likelihood of causing that of all the potential catalysts or culprits. I agree with you. There's a lot of big bad scary wolves that are going around blowing on houses. But at the end of the day, we can print so much money so quickly and inject that liquidity that it's almost like, it doesn't matter, because the rising tide floats all ships. It really, like, yes, the waves go out and expose a lot of the beach, but the tide's getting higher with every minute. So the recessions are getting higher. It's higher lows and higher highs. And so who cares is the bottom line.
The amount of recessions that have been predicted, the amount of black swan things that have been predicted, the amount of corrections that have been predicted since 2011 would blow your mind. And like basically none of them have materialized in any meaningful way. Like go take a look at the S&P chart from 2011 till today. You have to squint really hard to find wait a minute, it's down 20%. Well, not really. It only went down 18. Okay, but then it went back up really good. Like, seriously, if you would have grabbed onto headlines associated, with whether it's financial publications, financial news shows, everything in between, blood cells, right? You would have been in and out of the market or out of the market entirely, a dozen times over the past 15 years. I remember one of our customers, Large Public, like 3 years ago, 2023. He's like, yeah, just really being careful because I think there's, probably a decent chance that markets are going to go down and, probably a decent amount. So I got to be careful. I mean, I don't know. I have to go look at 2023. Where was the S&P in 2023? Significantly lower than it is today. So you see what I mean?
I have so many people. I was just getting at
that structure is my point. What breaks that the strength of that structure that's been created for 20 years now?
Well, but like go back to 99 and the tech bust, right? That was a monumental liquidity event. I mean, you talk about a lot of money getting just evaporated from the markets in a very short period of time. Multi-billion-dollar companies going to zero evaluations. And it was on the back of everybody having a new website and what that potential business could yield. And, this breakout in technology that caused this catalyst for growth. Well, you look at that and you go, okay, well, that was a massive failure. I mean, you're talking about just on epic proportions. And it was in conjunction with 9/11. It was, all these things and it's still, like Andrew said, it's a blip on the radar. It wasn't even anything to be concerned about in the grand scheme of things. And I do know personally a lot of people that drawdown was so violent and so scary for them that they sold out of all their equities. And then the V-shaped recovery happened and they had to buy back in at much higher prices. And that's what the markets are designed to do. If you could just set it and forget it without any emotional stress, or you wouldn't have to work for your money. And as they say, there is no free lunch. You have to work for it, whether it's through stress or whether it's through sweat or whether it's through intellectual prowess or whatever it may be. There's work involved, right?
Yeah, here's the chart Fibo sent me over. What is it here? It's a little bit blurry there. It looks like the blue line is the U.S.
Those are neat. Those are neat squiggles on a line. They really are. I'm impressed by them, but I'm also again looking at the S&P to less than 2% from its all-time high. I mean, we can look at lines all we want, but until we're 15 to 20% lower and in an actual correction, I just don't know if it serves the people that we're supposed to be speaking to on this show to talk about this stuff.
Well, yeah. and I would, again, let's look at the time frame. It's from 2022 to now. I mean, when I do back testing on any theory in the markets for a strategy that we're building for Arch, for example, I do tremendous amounts of work in making sure that I don't have a sample bias. That means you're cross-examining your samples across other portions of times out of sample testing, and doing multiple samples on multiple time frames, and then essentially doing a macro view, which is like a 20-year time frame. And so, yes, the divergence of those two lines are great, but it doesn't tell me how many times it's happened in history, doesn't tell me how many times it's corrected, doesn't tell me how really wide that is historically speaking, doesn't tell me all the information I have to have in order to make a fair assessment of this. But yes, a divergence of lines that are that correlated since 2022 is definitely something that if you're a technical trader, I see why you're paying attention to it. But again, it's like me going, the MACD crossed over. That doesn't mean it's going up. You know what I mean? That's one indicator of like a million that you can choose from. And it's also, and sometimes indicators go out of whack for periods of time, and then they come back into into being correlated again. So I just don't know what this means, is I guess the easy way to put it.
Yeah. And I mean, the one thing I think about it, especially the fact that we're looking at this in this particular time period here, is something that I've talked about numerous times, is that the financial system itself here in the U.S. is different, right? Again, we always warn that in markets you don't want to say, well, this time is different, because it very rarely ever is. But the Fed changed the way in which it acts and reacts with the markets 2019, 2021. And this was even noted by, what's her name, the old Fed person, when everybody's looking at her indicator saying, oh, look, we're going to a recession, whatever. And do what?
Janet Yellen, is that what you're talking about?
No. I cannot think of her name. She had she had created this indicator that looked back at unemployment and whatnot and determined when a recession was likely coming in. And it was all the talk about 5 years ago, whatever. And I was saying before she did, I was like, yeah, but this was prior to the way that the Fed works now. And then she came up and she said it all. She said, yeah, listen, I'm going to caution you guys against using that. We used it in the past because that was that system. But the regime is different now, right? The way in which the Fed actively backstops the markets is different.
That's a great point, Chris, because I'm thinking to myself, how many times in the past 5 years or 7 years, whatever the number is, have we heard pundits talk about the inverted yield curve? Oh, inverted yield curve. Everything's good. We're in trouble now. Inverted yield curve. And then 3-4 weeks go by and, okay, well, I guess something else is nothing happened. I mean, that's the point, is that sometimes the structural rigidity of the people involved in the markets and their capital involved in the markets is much, much, much more powerful than narratives or inverted yield curves or yada, yada, yada.
I think that changes
through those potential roadblocks, as if they're
well, I hope he's right. I hope he makes a bloody fortune. I mean, I hope he's wrong just because I want, good things to happen for the markets. But I'm saying I'm not rooting against Fib in this notion.
Sure.
It's no different than the Big Short, right? You were the boy who was crying wolf if you were saying the mortgage crisis was going to happen, but it happened. But that's kind of our point is, so what? Even that didn't take the system down. Like, what do we expect? Like a big drawdown? I would just be buying the whole way down. You know what I mean? That's the way I look at it. So those aren't negative things. Unless you're leveraged at these prices and don't have powder that's dry, that should be a buying opportunity, because this train's not going to stop unless we lose our military status in the world. In my opinion, I think those are that is the pillar that is underpinning this entire effort.
Well, it's interesting you bring that up, because I noticed something else here over the last few weeks that's been making the rounds. Because crypto Twitter tends to pick up on financial things, and then they kind of blow it up real, matter of fact, because they're just learning, right? A lot of people are just kind of learning about financial systems and whatnot. But there's this thing bumping around about how over the next 10 years, greatest GDP growth by a lot is going to be China, right? U.S. is going to be third in that. And so the line they try and draw is, okay, well, if that's with China, then that means China within the next 10 years is going to be controlling, is going to have the most influence in the world. And that isn't what it means, right? Because we're talking about growth over the next 10 years. And while that'll push them closer, the reality of it is the U.S. has, as it stands right now, we've still got the reserve currency. We've got the world's largest military. We've got like the world's 4 largest air forces, right? The Air Force, the Navy,
Space
the
Force.
Marine Corps,
Space Force. We're out there in space doing stuff.
Well, and other people don't understand that the helicopters from the Army.
We have 4 Air Forces. What are we talking about?
I'm just explaining it. Yes, the Air Force. Our Air Force is number 1. Our Navy is number 2. I believe the Marine Corps is number 3, and then the Army's helicopters division there is the 4th.
So in terms of the actual machines involved in each of those forces,
and it dwarfs everybody. Yeah.
Else. Got it. All right.
So when you look at that, when you look at the U.S., we're currently exerting the most influence and power throughout the world, both militarily and economically. We've got the world's global currency, reserve currency. Even if that projection came true, and China does this big jump, it still doesn't mean that they're going to control what's going on, right? The U.S. still has these other things going. So it does mean they'll have maybe a bigger say. Maybe they'll have a little bit more influence. But at the end of the day, unless the U.S. just completely shoots itself in the foot somehow over the next 10 years, we remain dominant. As long as we remain dominant, well, what we're doing with our markets has, a significant effect on what's going to happen with everybody else in the world, whether it be Japan, London, Russia, everywhere else, right?
Yeah, innovation solves all this, and innovation is coming down the pike faster than we understand, and so I'm going to educate myself about it because Fib keeps beating the drum. But even what I'm looking at on Grok right now, as it pertains to it, I mean, there's just a lot of things that they're well aware of it. They're aggressively battling it, and it's saying that it's not out of a whack compared to historical disjointed divergences. So it's not something that hasn't happened before, and it's not something that wasn't corrected in the past. The markets are more resilient now with more levers, more pulleys, more liquidity than ever before. They're instantaneous and more correlated and more connected. So, it seems like a smaller problem than it was historically for us to solve. And one would think that history would repeat itself in the fact that we would solve it. I don't know enough to know the mechanisms by which we would solve it, but it doesn't seem to be being ignored by the folks that can.
Real quick here, what do you guys think about, yesterday, you guys watched the market yesterday and the SaaS explosion, right? And so the big kind of realization that, oh my God, everybody's been worried about all these things about AI. And now the big thing is like, oh, hey, but we didn't pay attention to the fact that there's all these SaaS companies out there that were giving out all these loans, all this money. And all of a sudden AI's out here going, hey, guess what? Your SaaS company not going to, there's no reason for it to exist anymore. Claude code, everything else, people can kind of do their own thing now with AI. And so you had that huge hit to SaaS companies yesterday.
Have you set up Claude?
I have not yet.
It's setting up cold storage wallet in 2013.
Is it?
These types of things take time. It is nowhere near mass saturation, mass integration. Like it's hard. It's technical at a very high level. So it's exciting and it's groundbreaking and I'm using it and I love it and it's awesome, but it's not ready for public consumption. It's as clunky as you can get.
It's kind of like Bitcoin, 7 years ago. Back then I was saying, listen, until you get to the point where, because people don't want to be their own banks. They don't want to have to worry about, oh my God, if I send it to the wrong person, I can't get it back now. So until you kind of make it much more user friendly, right? It's not going to get the real wide mass adoption, mass use that everybody's looking for amongst retail, right? So it sounds like you're kind of saying the same thing about Claude there, that the design is kind of the same idea, right? It's overly complex for most people to start out with.
Well, even something as simple as Grok or OpenAI is above most people's pay grade. I was talking to a friend of mine here in the Valley yesterday, successful guy, talking to him about Grok, and he looked at me with these, glazed over eyes, and I said, "Do you know what Grok is? Don't you?" And he goes, "No, I don't. What's Grok?" And I literally blew his mind. And I said, "Listen, Grok is like literally having a genie in your pocket. If you want legal advice from a Harvard grad, 30-year experienced lawyer that has an entire staff behind him feeding him information, that's in your pocket now. If you want a professional marketing department that will come up with the best 10 ideas geographically according to your website, find deficiency." And I just started going through all, and he just was like, holy crap. But I had to write and send him the prompt. And I literally said, I gave him something as simple as it gets. But people just don't know how to approach this technology. And it's going to take a while before that they get comfortable doing it, because you feel like you can't imagine the difference that it can make in your life until you kind of figure out how to work it,
A reminder, because, we all live almost in a time-stamped bubble of our own making. Yeah. So remember that AI about 2.5 years ago was everybody creating new avatars of themselves, right? There was a couple apps that were actually pretty cool, and they give you like 15 versions of yourself as a space guy, as a cowboy.
You did that, didn't you, Andrew?
Oh yeah, for sure. And I remember I did it, late December. I was in Colorado by myself for like 3 days for a really important meeting that Tillman and I had with a guy that really ordered a lot of food at a restaurant that Tillman remembers. It's one of the most expensive meals we've ever done. Anyway,
it wasn't that it was expensive.
It was ransom. But I remember playing with it then. Point being is that's what it was 2 years ago, right? And now for those that are, early adopters, it's completely replaced. Like, when's the last time, Tillman, you've used Google for anything?
Zero. It's dead.
Yeah,
I used it this morning.
It just tells me that it tells me a lot about you, Chris. Then we need to have an intervention after this podcast.
We've gone in a 24-month period from using AI to manipulate photos that we have of ourselves to now AI can make us laugh by creating new versions of our favorite movies in front of Shark Tank.
See, to me, it's about efficiency of information query, right? It's like,
of course,
if I go to Google, I have to, no matter how genius I sit there and think about the keywords, I have to use little things like quotes around certain words. There's all these hidden commands that most people never take the time to understand. They just go in and type in I need a new briefcase. And the paid advertisements for the 5 companies that have paid Google the most amount of money dominate the first page of that search. And so that's like a very impersonal, bad way to personalize my shopping experience. Whereas if I go to Grok and I go, you know what? I've been looking to buy a briefcase, but I'm not really a briefcase guy. I want something that's very unique, handmade, specifically if you could find something that has a Texas or Western motif. Find me the 5 best handmade briefcases that meet that criteria and send me their website so that I can reach out to them. That it will deliver to me on a silver platter. And if I look at those and go to the first website and I don't really like it, I'm like, you got it wrong, man. The first website was completely wrong. You're thinking Western like, Johnny Depp Western. I'm talking about Western like John Wayne Western. You can literally have a conversation that will bring the world's information into the box and package that you're really looking for it to be in. You can't do that with anything else. There's this incredible vast world of data that exists that's at our fingertips, and there's no way to sort it without Grok or without OpenAI. And so that it's incredibly exciting from an efficiency perspective, because if I want to become an expert, let me tell you something. I don't do this, but I've thought about doing it. If I was on a podcast that I was going to be grilled on a bunch of stuff that was high level, just like, you could literally start a chat GPT conversation and leave the open mic on Grok. Leave it on. And tell it before you get on the podcast, hey, listen, when I say this keyword, the word that I say afterwards, or if I blink twice, the word I say afterwards, I need you to do a cursory explanation of what it means, where it's been used, why it's invaluable, and give me those bullet points. And then you go into that podcast, and you literally have a guy that's creating cue cards for you on the fly. That you can't do that with any other tool.
Tim is loving this. Look at Tim; he's so excited.
Oh, technology is the access to information is the most powerful thing that human beings have. That's what life is about: is seeking information. So if you have a genie that will deliver it to you exactly the way you want it, well, I mean, why wouldn't that be groundbreaking? And that's why, again, Fib, sorry, but I think that's such a big wave of water coming in. It's like a tsunami of innovation and capital placement that it doesn't matter what happens in the world. I think we're heading towards singularity, and we're on the parabolic side of the curve.
You heard it here first. Tillman says up only forever.
Until capitalism dies. Yep, that's the way I look at it. Sorry.
Oh, man. So I think one of the more interesting things, you guys have heard about Moltbook, right?
Yeah.
The AI agent meeting place, social media thing.
Yeah, that they're learning from each other.
Yeah, there's so much that people don't understand about what's going on there, right? They completely don't understand it. They attribute a lot of human traits to what's going on in AGI and all this, and it's really not. But what I found interesting was, again, something Bitcoin people have been talking about for years is, this idea of Bitcoin being used as money, right? And then when AI started coming up, they're like, hey, what about in the future where AI is using Bitcoin to kind of, transact and do its things? And what do we see? We're starting to get a little bit of semblance of that with some of these AI agents. They're through watching, everybody's sitting at home with the popcorn, watching the social media feed there. Oh, what are the AI agents talking about? They're gonna, are they gonna take us over tomorrow, kind of thing. But
well, they're learning from each other, which is a monumental step forward. And they're comparing databases and essentially refining the information across databases to make a more pertinent data set, which is incredible. I mean, it's like it's machine learning at its finest, and it's for all to see. And if you can't get your arms around that, you just play it out over time, and it means that there's going to be less and less disinformation and more accurate information, because AI is going to not be reliant on human beings to validate information anymore.
Now here's the other side of that, though, because these models, these AIs, what they do is they smooth, right? They go to the greatest common denominator when it comes. So if you've got the one,
but that's specific to the model, right? You don't have to have.
That's specific to all AI. All AI is a smoothing model. That's the problem. There's not the human roughness that we have. So what you get when you have a whole bunch of AI agents together and kind of learning from each other is you don't get like this mushroom cloud of ideas. You get this honing into a smoothing of what's going on there. And to me, that actually becomes much more dangerous than Skynet. You know, everybody's like, oh, Skynet, AGI, you're going to come down and kill us. But really, it's more this idea that we outsource more and more of our decision-making to AI, which smooths everything down, makes everything much more of a bland world.
Well, but nothing is going to kill the human spark in that equation. You know what I mean? Like, I personally look at the smoothing down as standard operating procedures, efficiency curves, like all the things that are. Yeah, but that's not the magic in a business.
Right.
That's the outsource. You can hire an accounting firm. You can hire a law firm. You can hire really, really commodity-driven based service firms to give you all of that. AI is going to give you all that without any of the conversations needed, because it's going to know you. It's going to know your business. It's going to be able to, if I say to AI, and a lot of people don't even know this thing, and let me help you. So I've tested Grok and OpenAI. I personally think Grok's way better. I think it's more real time in terms of its data feed. I can query Grok as it pertains to sports teams and the scores within 2 minutes of the end of the game, and it knows what the score was. Whereas OpenAI doesn't have that type of real time data set. But you start to go, okay, if I want to become an expert, or I need to at least sharpen my skills on any given subject, Grok is the first place I go now, because even though it may give me the vanilla, it's the base for creatively understanding what can be done and what can't be done. You see what I'm saying? So then you put your creative emphasis on top of it, and you build something, and then it whittles it down into standard best practices against that. That's empowering.
That's the catch. See, that's the catch. You're doing something that generally most people using AI aren't doing, and they're finding out. They're doing these tests of people that have kind of used AI a lot, and what they're finding is if you're using it a lot to just kind of to give you information to answer your question, that's it. Your ability to be creative, your ability to think, to have those rough edges, to get those sparks diminishes. Doesn't mean it's gone forever. It means you have to stop then using AI for I'll get back. But when you're doing it like you're doing, where it says, here's the thing, and you keep thinking and you keep pushing and asking questions and considering.
Well, I'm just digitizing my entire life. So like I went and took pictures of every wine bottle I own, every liquor bottle I own, so that my Grok conversation, it's called wine spirit inventory. And so when I add one, I'm at the liquor store and I can just take a picture of a bottle and be like, hey, how does this fit into my current collection? Is it, should I focus on something else? And it'll give me really pertinent information that's specific to me, right?
And Saturday night, Grok.
No, I went to some really dear friends of ours' house the other day it was a chili night. And I was like, what wine out of my collection would best pair with a chili night with some dear friends? And it gave me the top 5 selections and told me why. And so, yeah, I could have picked those myself, but I got educated on the 5 best choices from a sommelier that was way above my pay grade. You know what I mean? So now I kind of know, like, hey, guess what? If you're ever having a rich chili, Merlot is the pick. Okay, so now you know.
Now everybody, now all of y'all know, and you ain't got to ask no AI. Now you know.
There you go.
Andrew's taking notes right now, I think.
Yeah. I back in high school, I was called Rich Chili. I mean, for my nickname. So
That doesn't surprise me.
makes sense. Are we done with this podcast? I mean, there's so many.
We're never done. This is great stuff. Listen, guys, I have been told by so many people this is their absolute favorite time of the week. And I think that's something.
Listen, me and Andrew don't count. Okay, that you have to ask people that listen to the show that aren't participants.
Hey, these are great people. These are great people. Don't be running off your potential customers. What are you talking about, man? Y'all are idiots if you like the show. No, you're not. You're great people.
I just want to say your commitment to fashion, Chris, and I know that I'm not the world's biggest fashion guy. But the golf shirt underneath the
it was cold, man.
The sweatshirt is really, it's a high level of commitment to fashion.
Man, I gotta let people know I'm serious. I gotta have the collar so they know I'm serious and not a degenerate with just.
I don't know if I've ever rocked that myself. And I've been out on the edges before. I have. So
listen, he's rebelling against AI. The only thing you can control is being controlled by AI. Okay, that's the only thing you have.
Actually, the only thing you control is, as Tillman knows, how much you lose. And with that, we want to say thank you so much for joining us. I hope you guys have a great week.
I was wondering when
these guys.
When you're 85, like I did you find that phrase on Mount Moldor in a fire? Like, how did you latch onto that as your ring? Because
I'm a traitor.
There's nothing like when he on his deathbed, his last breath breathes.
That's right.
He's like,
that's right.
The only thing you can control is how much you lose.
And if I do it just like that, you better record and show everybody.
Chris, what are we doing here, man? What happened to you that's caused PTSD?
It's all about risk management, man, in life. It's all about risk management in life, man. It really is, Too many of these kids today, they're out there YOLOing their life. And
that's actually a better phrase than your other one. It's all about risk management in life. Replace that one with this. Huh? It's not the same thing.
It is, exactly.
The one that you say is a lie. There's lots of other things that you can control. You use the word only.
I do.
The only thing you can control in life. No, I'm controlling lots of that. Look, I'm controlling whether I drink water and stay hydrated. Look, I'm controlling it.
And stay hydrated. You're controlling how much you lose of your life.
If you have to explain a joke or a thesis statement, it's not a good thesis statement. That's how I listen. Fib, please, Fib, talk to your friend here. The only thing you can control. Hey, if that's the only thing you can control, then why do we look at Fib sequences? Because they're out of our control. They control themselves. They are self-set.
So we know what's happening. That's why.
Oh my gosh! I swear, when we finally win this argument, we're gonna have to get you a tattoo that says you can't control anything in life.
Now we know you'll never win because I don't have a tattoo. I'll never get one. So now we know you're never going to win this argument. So
we are going to tape you to the table, my friend. There's a new world coming.
It'll be like 40-year-old virgin, when he gets his stuff pulled off. That's what we're gonna do.
Yeah, bottom of your foot. If I heard it, feels really good.
All right, we're out of here. Hey, everybody, have a great week. Be good out there. Stay warm, stay safe. All that.
He wants to say it again, but he's
guys next week. Once Tillman figures out the only thing he can control is how much he loses. There we go.
He's OCD. He's OCD. He really.
You gotta do something. All right, you guys.
Hey, go touch the doorknob twice before you shut the door, Chris. See you later,
Take care.
Trading tip: always manage risk before chasing gains.